Welcome to this special briefing, where we're going to break down what's happening with Hindustan Unilever. We'll get into their latest performance and, maybe more importantly, unpack the strategic roadmap they've designed to fuel their next wave of growth.
So think about this for a second. HUL is in 9 out of every 10 Indian homes. That kind of reach is just massive. But the big question for them isn't about scale anymore. It's all about agility. So today, we're going to explore how this giant is learning to dance, how it's rewiring its entire operation to not just keep up, but to actually set the pace for the future of Indian commerce. All right, let's get right into it and start with the headline numbers from the latest quarter. They tell a really clear story about the momentum that's building up.
First up, underlying volume growth came in at a solid 4%. Now, this is a super critical number. Why? Because it tells you that more people are actually buying HUL products, and they're buying them more often. It's real demand.
And that volume growth, that 4%, it directly fueled a 5% jump in underlying sales growth. So you can see that this is a healthy, sustainable expansion that's being driven by actual consumer choice.
And here's the thing, they pulled all of this off while keeping a really robust EBITDA margin of 23.3%. That's smack in the middle of their guided range, which, is a real testament to their disciplined financial management.
So the crucial point here, the big takeaway, is that this performance isn't just a one-off thing. That 4% is the highest volume growth HUL has seen in 3 years. That tells you we're looking at a trend here, an accelerating, broad-based growth that's happening across their whole portfolio.
So how are they doing it? Well, that performance is built on a completely refreshed strategy. HUL is making a big shift here, from just selling goods to really architecting brands that are designed from the ground up for the modern Indian consumer. And the vision from the CEO, Priya Nair, is crystal clear. The game has changed. It's no longer just about meeting needs. It's about actively creating brands that people truly desire and go out of their way to find. And the engine that's driving this big ambition? It's a new internal playbook they call the SASSY framework. You can think of it as their structured approach to making every single brand they have more relevant and more resonant.
So what is this SASSY framework? Well, it breaks down into 5 key pillars. It all starts with deep consumer insight, it's powered by best-in-class science, then it gets strengthened by the authority of celebrities and stylists, it's designed to look contemporary and authentic, and it's made relevant through diverse and inclusive representation. For investors, what this really is HUL's formula for winning in the age of social media. It's about creating cultural relevance that generates that organic demand. Of course, having a great playbook is one thing, but you need the right team to execute it, right? And that's why HUL has gone through this fundamental rewiring of its entire operational engine. The goal? To become simpler and much, much faster. So what did they do? They flattened the organization. They got rid of these dual reporting lines, so now all the business unit heads report directly to the CEO. This just means decisions can be made way faster and closer to the actual market, really empowering teams to act with this India for India mindset. And this newfound agility goes right into their innovation pipeline. They've created a new dedicated India R&D organization whose whole job is to rapidly take Unilever's best global science and tech and adapt it specifically for the needs and tastes of Indian consumers.
And this slide just perfectly illustrates that change in action. Look at the supply chain. They've totally re-engineered it for the insane demands of quick commerce. By plugging in real-time data and working on collaborative forecasting, they have slashed lead times by 20% and boosted service levels by a massive 1,400 basis points.
Okay, so you've got a new strategy and a rewired engine. What does that actually get you? Well, it delivers tangible, really impressive results, especially in the fastest-growing parts of the market.
Take a look at their direct-to-consumer portfolio. This is powered by their acquisitions like Minimalist and Oziva, and it has scaled incredibly fast. It is now a formidable business with an annual run rate of 1,100 crore rupees. This really proves that HUL can win in these new channels.
And that success is being copied all over the place. They're developing new categories from scratch. They tripled their body wash business in just 3 years. They're successfully driving premiumization, using things like special Surf Excel packs to bring first-time users into the brand. And they're expanding their most iconic brands like Kissan into totally new growth areas.
All right, to wrap all this up, let's address a few key questions that would be top of mind for any investor who's looking at HUL's current position and, its future outlook. First up, the big one, input costs. With prices for everything going up and down, how are they protecting their profitability?
The strategy here is really balanced and disciplined. They're using a two-pronged approach. On one side, they're taking careful, calibrated price increases where they absolutely have to. But on the other, they're driving a really strong internal savings program to soak up those costs and protect the consumer as much as possible.
Okay, next question. There was a major portfolio shift with the demerger of the ice cream business. So how's that going to impact long-term margin guidance?
And the answer is refreshingly simple. It won't. There's no impact on the guidance. The current margin targets they've set already had the demerger factored in. So for investors, that means stability and predictability.
And what about the future? Well, management has given a pretty clear and confident outlook. They're signaling that they expect growth to continue and actually accelerate into the coming fiscal years.
So, what this all reveals is a company that's in a deep transformation. HUL is successfully blending its historic, massive scale with a newfound agility. They're positioning themselves not just as a market leader, but as a key architect of India's commercial future. And that really leaves us with one final thought. What is the full potential of a giant that has truly learned how to dance?